divergence were being seen on the broad-based US stock market yesterday, where we continue to see consecutive underperformance of the technology stocks, where the Nasdaq 100 closed almost down by -2% yesterday, whereas we have the old industrial stocks within the Dow Jones Industrial Average managed to be unscattered and rallied by 0.5%. In the commodity space, oil prices continues to rally, up by 1% due to re-emergence of this US-Iran tension, and as well as gold continues to struggle to break above the psychological US dollar $5,000 per ounce. Very good morning to all, and welcome back to today's Daily Dose of Market Insights. I'm Kelvin here. Today will be the Thursday, the 5th of February 2026. So as usual, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is for general information purposes and is not investment advice. Past information is not representative of future results. Okay, so here we go. Okay, let me adjust my mic. Okay, so basically, let's have a quick recap what has taken shape yesterday in terms of the price action movement and the respective relevant news flow over here. So let us very quickly take a look at the performance of the US stock market. Hopefully the screen is good. All right, excellent. So what we could see over at the screen is that we see the divergence that is taking shape between the S&P 500, the Nasdaq 100, and the Dow Jones Industrial Average. So the Nasdaq 100 closed almost -2%, to be precise, -1.7%. Whereas if you look at the Dow Jones Industrial Average, managed to rally by 0.5%. So what we could see right now is the continue of this kind of divergence between the major US stock indices. As we mentioned earlier at the start of this year, there's this ongoing underperformance of the mega cap technology stocks, which is continues to be pretty much intact as the Q1 gets underway. And even though various mega cap technology stocks reported their earnings beat expectation, but however, that failed to actually provide an uplift in general to the sentiment of this Nasdaq 100. All right, so if you look at the heat map of the S&P 500 over here, so very quickly, let me take you through the heat map. Okay, so what I could see is that a sea of red within the semiconductor space and some of the semiconductor equipment, computer hardware, and electronic components over here. And even infrastructure, we start to see a sea of red for Oracle, down by -5%, and Palantir, despite the fact that they give a very rosy guidance a day earlier, it was down -12%. And within the other mega cap technology top stocks, but they are being placed under consumer cyclical. Amazon is down by -2.4%, and communication services, which traditionally is more of your web-based business, but in some sense now they're being transformed into an AI play. Google/Alphabet down -2.16%, and Meta down by -3.28%. So if you look at today's price action on the S&P 500 E-mini futures, they're actually also pretty much lackluster. So if you look at the E-mini futures that is trading right now in today's Asia session at 11:07 a.m., is actually trading almost the unchanged mark, and the Nasdaq 100 failed to gain any meaningful rally, which is what almost trading unchanged right now as we are speaking, due to the fact that we start to see this after share price sell-off by two key semiconductor/AI players, which is first of them on share is Qualcomm. So Qualcomm reported their earnings, their Q4 earnings after the close of the US session yesterday, which is i.e. today's early Asia session time after 5 a.m. Singapore time. So what Qualcomm did is that it beat the revenue, it beat Q4 earnings and revenue, but however, the Q1 forward guidance projection was a lackluster revenue forecast. All right, that came in below expectation, and with this lackluster revenue forecast for Q1, that actually dragged down Qualcomm stock by closing in the after hours trading close to 10%. To be precise, negative 9.68%, so close to a 10% drop in the after hours trading session. Then we have Alphabet, which is the parent company of Google. So both of them top projections for quarterly revenue and outline a ambitious capital spending plan, leveraging its growth to build up the data centers and infrastructure needed to lead the AI race. So overall, it's rather a rosy earnings number, both in terms of the Q4 results, which beat expectation, and also they also came out with a rosy guidance as well for Q1. But however, the stock price, the share price didn't actually rally during the after hours session. So in the normal hours before the release of the results, Alphabet share was actually down by negative 2.16%. Then after that, in the after hours trading, it was almost down slightly 0.4%. So there's no significant rally, despite the fact that its forward guidance for Q1 comes in rosy. All right, so right now it seems to us that there's this bigger overhang where there is this indiscrimination underperformance that is being seen in all AI related / technology names as a whole in general. That if you look at the from a group and a sectoral basis under the 11 S&P sector, so very clearly yesterday top 4 performer or top 5 performer were the real estate, energy, which is both up by 1.5%, 1.4%. Then you have consumer defensive 0.93%, healthcare 0.85%, and financial stocks in general up 0.48%. So all these healthcare and financial especially are heavyweights in the Dow Jones Industrial Average. So that actually explained to us why the Dow Jones Industrial Average managed to be unscattered yesterday and closed up by 0.53%, right, due to its heavyweight on the financials and healthcare sector. All right, so that is the state of the US stock market, where we're going to see underperformance of the Nasdaq 100 driven by that 2 consecutive days of sell-off in tech / AI related names. Now on towards the FX market over here. So the FX market, what we could see is this is the 5-day rolling performance of the dollar against the other major currency, more like a sideways consolidation ahead of today's risk event, which is ECB policy meeting as well as Bank of England monetary policy meeting. So if you look at the 1-day performance over here, so the 1-day performance as we are speaking right now in the Asia session, which is at 11 a.m. Singapore time, now we are speaking, there's some sign of dollar retreat right now as we are speaking into the night. You see all the dollar pair against the major currency is taking a minor setback. So with that, let's have a quick look at the dollar index. All right, so the dollar index charts over here, what we could see that it seems to us that this mean reversion rebound from the low of 27th of January, which is last Tuesday, seems to be extending further, perhaps back to the retest between the 20-day, the 50-day moving average again, which is if you look at from a much more precise basis. Okay, at 98.05. 98.55 over here. So there seems to be that there's some more room to go towards this level here, 98.05, then 98.55 in a very short term. Okay, so thereafter, but it's more like if you later I will share the 4 major US dollar pair. It's more like a mixed bag of trading price action right now as we are speaking. All right, so now let us now look at the second segment of the daily dose, which is the intraday technical outlook segment. All right, so before that, let me expand my screen for you guys to have a better view of the charts over here. So this will be a full suit, which I will cover all the technical outlook, okay, for all the instrument that we have. So very quickly, let's start with the euro dollar first. All right, so let me expand the screen. Okay, the euro dollar. So what you could see over here is that the euro dollar, it seems to us that right now this particular rebound from this Tuesday is getting rather lackluster, and price action seems to be retesting the 20 and the 50-day moving average area over here. So with that, And also the hourly RSI has just broken down below a parallel minor ascending trendline support. Okay, indicating that we are now seeing some form of intraday bearish momentum ahead of the key risk event that is taking shape right now, which is that taking shape later. I'll show the timing, which is the ECB monetary policy meeting, and as well as the press conference by ECB President Lagarde over here. So given that this momentum here is still rather lackluster, so on the intraday basis, I will have a bearish bias right now ahead of ECB monetary policy meeting, which is using 118.40 as my short-term pivotal resistance level. Intermediate support zone to watch will be the area between the 20-day moving average and the 50-day moving average, which is 117.56, 117.28. Break below 117.28 may expose the next near-term support level at 116.70 next. Only a bullish breakout and an hourly close above 118.40 will allow the euro dollar to escape this near-term bearish momentum that is potentially building up and potentially see a minor bounce to retest 119.07. A breakout above 119.07 will increase the odds of another round of bullish impulsive upmove sequence to revisit 119.93 in the first step. So that's for the euro dollar. Next will be the sterling pound over here. So the sterling pound also remains rather lackluster as well. So what we could see over here is that it continues to inch down lower and now fast approaching the area of the 20-day moving average over here. So with that, I will have a pivotal resistance at 136.08 for today to have a minor bearish view on the sterling dollar. First support level to watch will be the area close to the 20-day moving average at 135.88 slash 135.68. A breakdown below 135.68 potentially exposes us the next support level at 135 figure level, which is if you do the Fibo retracement of the previous up move from the low of 19th of Jan all the way up to the high of 28th of January. That coincide very closely to the 76.4% Fibo retracement, which is slightly lower at 34.67 or 34.70. Okay, only a bullish breakout above 137.08 will potentially revisit 137.50. Clearance above 137.50 will invalidate the bearish bias move and potentially switch the sentiment back towards the bulls again for the sterling dollar to at least make a retest on 28th of January and 29th of January swing high area was at 38.48 in the first step. So that's for the sterling pound. Next will be the Asia Pacific currency. All right, starting with the Aussie dollar. Let me expose again the Aussie dollar. So the Aussie dollar, as we could see yesterday, we do have a very tight pivotal support level, which is at 69.40 that we have. So price action didn't retest 70.90 and stage hourly bearish breakdown below it as we are speaking at the 10 a.m. Singapore hour mark over here. So with that, it could be remains congestion within this sideways range that has taken shape from the high of 29th of January. So with that, I will have a neutrality stance for today. All right, so let's switch to a neutrality stance. Okay, let me change the color. All right, so neutral, oops, sorry. Between 70.90, which is the current high of 29th of January, and also the current 52-week high for the Aussie dollar. So neutral between 70.90 and 69.07, 68.90 over here. So only a breakdown below 68.90 potentially see a dip towards 68.35. That is a retest of the 20-day moving average. So upon hitting the 68.35, I'll be on the lookout for some signs of a bullish reversal candlestick to flip my bias back to the bull side of the story again for the Aussie dollar. So neutral for now, as it may continue to trade inside this sideways range for today between 70.90, 69.07 and 68.90 as more new elements come into play. So that's for the Aussie dollar. Next will be the dollar yen over here. So the dollar yen right now is actually approaching our medium-term pivotal resistance area, which is at 157.50 level, which was the former minor range support level from 12th of January all the way down to 20th of January before the price action broke down and see this 2 days of a steep sell-off. And what's interesting over here is that as price approaches the 157.50 medium-term pivotal resistance, the hourly RSI now has starts to shape a clear bearish divergence. All right, over here, indicating that price action move up higher during yesterday's European session to today's early Asia session, but the momentum indicator, which the hourly RSI didn't actually move in line with the price action, indicating that the momentum on the bullish side has started to ease off. So indicating that there could be a chance for it to do at least a minor setback in the first step. So with that, I'll be using a 157.50 as my medium-term pivotal resistance level to have a bearish view for today for a potential minor setback in the first step. First support level to watch will be the 156.36 level, which is pretty much the low of yesterday's, the low of yesterday's US session, and so confluence with the 50-day moving average. A breakdown below 156.36 potentially may seek out the next near-term resistance area, near-term support area, which is this congestion area over here for Monday all the way up to the low of Tuesday during the US session, coming in at this 155.66 over here. Okay, let me put it in writing. 155.56. All right, only a breakdown below 155 point. Sorry, not 56, it's 66. My apologies. Okay, 155.66. Breaking down below 155.66 potentially open up scope for a deeper minor setback towards 154.73, which is very clearly this minor swing low that managed to survive on Monday before staging this last leg of push up over here. So if you look at the 154.73, it's also close to a Fibo retracement level from the current rebound of the low of last Wednesday all the way up to today's Asia session high. That coincide closely with the 50% Fibo retracement. Only a sudden erratic push up and the hourly close above 157.50 may see a squeeze up back towards the intervention risk area at 158.90, 159.45. So 159.45 was 14th of January, and this 159.45 is the high previously, where the last known official intervention that is being made public by the Bank of Japan under the instruction of the Ministry of Finance, which occurred on 12th of July 2024. So the high of 12th July 2024 was exactly at 159.45. That coincided with the high that was seen on 14th of January before the price action did a multi-day dip over here. All right, so that's for the dollar yen. Flipping to a bearish bias using 157.50 medium-term pivotal resistance. In first step, a mild minor setback scenario with 3 support level to watch out for now: 153.36, 155.66, 154.73. All right, so that sum up all the 4 major dollar pair for today. Now let us now proceed with the major stock indices over here, starting with the Hong Kong 33. That is representing the Hang Seng Index. So the Hong Kong 33 continues to trade above the 50-day moving average over here, 50-day moving average. And what's interesting over here is that price action now managed to stage a bounce close to the 50-day moving average, which is also the minor swing low of this Tuesday as well, 3rd of February, which is coming in at around the 26,375 level. And what's interesting over here is that the hourly RSI has now started to shape a bullish divergence. So indicating that the downside momentum that has taken shape yesterday during the US session over here has started to die off by this appearance of this bearish divergence on the hourly RSI. So with that, for sure, the short-term pivotal support level to look out for will be at 26,285, which is confluencing with this rising 50-day moving average. Have a mild bullish bias scenario on the Hong Kong 33 that's representing the Hang Seng Index for today. In first step for a retest towards this minor range resistance level or range resistance area that has been in play since 3rd of February, which is at 26,990. Upper limit 27,175. So only a bullish breakout above 27,175 when it retest the major resistance level at 27,500. However, a bearish breakdown below 26,285 will see the continuation of this minor corrective decline sequence unfolding to revisit 25,970, 25,820, maximum 25,530, so which is the minor swing low area of 29th of December and 31st of December, and 25,820, 25,970 is the swing low of 8th of January, and also this dotted gray line here, which is the former double bottom. This is the double bottom neckline resistance that was taken out previously, managed to retest and stage the last impulsive rebound on the 8th of January, and now acting as its support level at 25,970, 25,820. Then let me recap why 27,500 is a major resistance, where it need to have a weekly close above it to solidify the potential start of a major uptrend phase slash multi-month uptrend phase on the Hong Kong 33. So this is 27,500, where during the week last week it has an intraday break, but it can't have a weekly close above it by forming this long tail candlestick on last Friday. So this is the weekly chart of the Hong Kong 33 representing the Hang Seng Index. So 27,500 coincide with this long-term circular descending trend line drawn from the current all-time high way back on 29th of January 2018. And this line here previously in the past prevent any significant rally from taking place on 15th of February. And it got challenged again on last year, 22nd of September 2025. And at the early part of November, 10th of November, and right now at the start of this year, which is 26th of January last week. So that's why I give us the 27,500 is a very, very important major resistance level on the Hong Kong 33. Right, very quickly, now let us now have a technical outlook on the Japan 225. So the Japan 225 represent Nikkei 225 was my chart of the day yesterday. It rarely hit our first resistance level, which is the current all-time high area here at 54,910, 55,015 before shaping that pullback. All right, so no change in terms of the levels to look out for. Still holding above this rising 20-day moving average, which confluence with the minor low of 4th of February. So still keeping the short-term pivotal support level at 53,500. Maintain this ongoing short-term intraday bullish bias on the Japan 225. First resistance level to look out for sure will be yesterday's rejection level at 54,910, 55,050. A breakout above 55,050 potentially take us up higher to a new resistance level or area at 55,530, 55,623, which is a Fibo extension cluster. Only a bearish breakdown below 53,500 and an hourly close below it will negate this bullish tone and see a much more deeper minor setback unfolding to revisit the low of 2nd of February, which confluence with the rising minor ascending trend line that it has been in play since 21st of January 2026 swing low, which will be at 52,670, 52,425. So that's for the Japan 225 representing the Nikkei 225. Next will be the Germany 30 representing the German DAX. So the Germany 30 managed to stage a recovery at the 50-day moving average, bounce up, hit the previous gap resistance level, which was on 19th of Jan, and also very close to the 20-day moving average, can't maintain its momentum, and did a pullback yesterday. All right, over here. So the pullback actually stopped at this Fibo retracement of this last push up from the low of 2nd of February to the high of 3rd of February. That's the golden ratio of 61.8%. That's give us first intermediate support level to watch on the Germany 30, which is 24,566 over here. But however, it can't break above this key resistance level at 25,100. I do not want to be so aggressive to have a pivotal support level at 24,566. So instead, I will use the V-shaped recovery low, or the minor V-shaped recovery low that took place on Monday this week. That will be my short-term pivotal support level, ST pivot. Okay, so with this short-term pivotal support level, in first step, the first resistance to swing back up will be 25,100, which is indeed this resistance here that can't break out since 19th of January. So only a push up above 25,100 that I could tighten my pivotal support level to 24,566 for today. And in the next few steps, the potential intermediate resistance level to look out for will be at 25,260. So above 25,260, potentially seek out a retest at the current all-time high area on 13th of January at 25,505. Only a bearish breakdown below 24,250 that would see the extension of this corrective decline sequence unfolding to revisit or retest 24,000/23,885, which is the minor swing low of 18th of December and the 200-day moving average. All right, so that's for the Germany 30. Next, we will have the rather mixed performance among the major US stock indices, starting with the US Wall Street 30, representing the Dow Jones Industrial Average. So the US Wall Street 30 managed to bounce and now continues to trade above the 50-day, and the 20-day moving average over here. So right now it's fast approaching the current all-time high area, which is at 49,606. So the all-time high intraday, the all-time intraday high on 7th of January was 49,673. All right, so it looks at from here, this is indeed a stubborn resistance. And this resistance was tested again yesterday during the mid-US session, but price action continues to remain pretty much constructive and continues to trade in a series of higher low after retest at the 50-day moving average over here. All right, so it seems to us that there could be also a minor ascending channel emerging up from it as well. So let me draw this the minor ascending channel from the low of this Friday, where it tested the 50-day moving average and staged a bounce. All right, so this is the ascending channel over here. So this ascending channel also, the upper limit also coincide with this upper limit of this medium-term ascending channel that is still in place since 23rd of May 2025 low. All right, so no change in terms of the levels, given that it can't break above the current all-time high resistance level that has been tested several times since 13th of January. That will be 49,606. So unless we have a clear hourly close above 49,606, then I will tighten my pivotal support level to 49,260. So right now, the pivotal support level still remains the same previously, which we highlighted, 49,050. So above 49,606, potentially could see higher levels coming in, which is 49,805, 49,840, followed by 50,030, which is a bunch of Fibo extension cluster level, and 50,030 right now is very close to the upper limit of this ongoing minor ascending channel. Only a bearish breakdown below 49,050, then that will start to see another choppy downward drift downwards towards 48,713, and followed by the all-important minor range bottom that has been in place since last Wednesday, 21st of January, that was retested on Monday, survived. We should be at a zone of 48,480, 48,340. Right, so that's for the Dow Jones Industrial Average, which is the US Wall Street 30. Next will be the S&P. Whoops, give me a minute. It will be the S&P 500. So the S&P 500 managed to survive at this minor range support level that has been in place since 23rd of January at 6877, 6860 over here. Okay, yesterday's sell-off, it managed to actually survive off it. So with no change, given that this will be still my pivotal support level to watch for today, the range support level. So it seems to us that it's now trapped within this minor range configuration, with the current all-time high area can't do a significant bullish breakout, and price action traded back down towards this range and managed to survive. And upon trading back down towards this range, it staged a lower low, the key minor range support level, a lower low, but in correspondence, the RSI shaped a higher low all right, indicating that yesterday's bearish momentum has started to ease off, where now there could be a chance for it to bounce back up towards the range top again, which is the current all-time high area. So with that, we are taking things one step at a time. So pivotal support level will be this key range support level, 6877, 6860. Do have a mild bullish bias for today on the SPX 500, as it could potentially shape a bounce back towards the middle part of the range first, which is the swing high area of yesterday's European session before the start of the US session at 6,943. That also confluence with the 20-day moving average as well. So this will be the middle part of the range and the first resistance level to watch for today for any chance of a potential mild bounce up from this level at this juncture. So 6,943, that will be my first resistance level to watch. A breakout above 6,943 potentially may seek a further push up to test the all-important current minor range resistance, which is the all-time high area at 7,005, 7,014. That failed to break above it since 28th of January. Only a bearish breakdown and hourly close below 6,860 will invalidate this bounce within a minor range configuration to see a further weakness to retest the low of 21st of January at 6,796, followed by 6,769, which is the congestion area. Okay, give me a couple of minutes, second to turn up. Yeah, the congestion area of 18th of December. Okay, so that's for the SPX 500. Lastly will be the Nasdaq 100 over here. So the Nasdaq 100 now managed to pause exactly at our medium-term pivotal support zone that we previously highlighted, 24,700, 24,580. So yesterday we do have a neutrality range. So it broke down below the neutrality range at around 25,200 level, drift down to the support level, which is our medium-term pivotal support zone, 24,700, 24,580, and also the important 18th of December swing low over here that managed to stage a bounce to retest the current all-time high, almost hit of that was being seen on October last year at 26,290 before this nasty drift downwards. So with that, given the fact that it has really approached this medium-term pivotal support area and staging a bounce, there could be a chance for it to stage a minor bounce recovery scenario for today to retest above the 50-day and the 20-day moving averages. So in first step, the first support level to watch will be yesterday's neutrality zone support, now turns into a pullback resistance at 25,110. Above 25,110 may see this bounce continue, potentially to revisit the 50-day and the 20-day moving average at 25,430, maximum 25,580 for now. However, if we do not able to see a bounce and from here the bearish momentum takes hold and have a bearish breakdown below 24,580, then potentially the Nasdaq 100 will continue to drift downwards towards the next support level at 24,333, 24,142, which is this minor congestion area of 21st of November last year. All right, so that's for the Nasdaq 100, and 24,033 coincide with the 76.4 Fibo retracement of the last movement up from 21st of November all the way up to the recent high of last Wednesday, 28th of January. Okay, so that's for the Nasdaq 100 and sum up all the intraday technical outlook on the broad-based stock indices. So let us now proceed with the commodities market, starting with the Gold XAU/USD first. So for Gold XAU/USD, let me take you through the hourly chart over here. So this is the hourly chart where previously last Friday we have a bearish evening star, and we have that rebound that has taken shape on Monday, Wednesday, Tuesday and Wednesday, where Wednesday we do have a neutrality stance because that rebound is coming very close to the resistance, which indeed at the end of Wednesday US session imprinted out a spinning top, or a we call it not a spinning top, a long-legged doji over here, small little body with two tails at the high and the low, indicating the lack of bullish conviction. And what you see right now in today's Asia session, this is a daily time frame chart because the day hasn't ended yet, because it only takes into account of the close of the US session that we are able to see the full candlestick pattern. So right now it's forming a bearish engulfing candlestick where we start to see this candle, a black bearish body candle covering the small little doji candlestick body that was ended yesterday, indicating that indeed the current bounce is losing steam in the last since Monday. All right, so with this rather negative element that is playing out on gold, indeed increase my conviction that we may not start to see further bounces at this juncture, potentially due to this bearish candlestick appearance. So going back to the hourly time frame chart, so still recall yesterday gold, I have a neutrality stance, neutral between 5,169 and 4,795, which is the 20-day moving average. So now there's some bounce coming from it, but given the daily candlestick pattern is not so bullish, but instead is turning much more bearish, I will have a bearish bias for today on gold XAU/USD for sure, using 5,169 as my short-term pivotal resistance. A breakdown below 4,795 will potentially see an intraday bearish acceleration to retest that Monday bullish reversal low area, which is close to the 50-day moving average as well, at 4,500, 4,405. A breakdown below 4,405 potentially see another round of bearish impulsive corrective down movement towards 4,285, followed by 4,129, which is the 20th and 25th of November congestion area. So that's for gold XAU/USD. Only a bullish breakout and an hourly close above 5,169 will invalidate today's intraday bearish view to see a further squeeze up in first step towards 4,448, followed by the current all-time high at 5,448, pardon me, followed by then thereafter the current all-time high at 5,602 over here. So that's the gold XAU/USD. And lastly will be the West Texas crude oil. So West Texas crude oil yesterday was being featured as the chart of the day over here. So price action continues to trade pretty much firmly above the 20-day moving average as it continues to oscillate above the 200-day moving average as well, and as well as we in this minor ascending channel that is still in play since 7th of January 2026, a low due to the ongoing renewed tension between US and Iran. So given the fact that it managed to shape a series of higher low, higher high, and now I'll be using very closely the 200-day moving average to shift my pivotal support level. Previously was at 61.12, 60.64 to 62.38. So 62.38 will be my pivotal support for today, a tighten one. First resistance level to watch will be the high that was seen on last Thursday at 66.50, 66.85, followed by 67.80, which is a Fibo extension level, and 67.80 if you go back in time over here. It's actually the minor congestion area of 29th of July and 4th of August last year. And if you go all the way back over here again, a breakdown below 62.38 over here, that would negate today's bullish bias to see a slide to retest this Tuesday key swing low area at 61.12, 60.64. So that's for West Texas oil, still maintaining a bullish bias with a slightly tightened adjusted pivotal support for today at 62.38. All right, so that sum up all the intraday technical outlook on the broad-based cross asset classes. So before we go, let's have a quick look at the economic calendar. What are the key things to look out for today? At the start of the European session. So today will be the Thursday over here. So for Thursday, we do have the very important two developed nations central bank meeting, will be the Bank of England coming in at 8 p.m. Singapore time. So no change for the Bank of England, still remains the same at 3.75%. But most important will be the report over here. So how's the tonality will sound, because given the fact that inflation rate in UK is still remains rather elevated, but however, the labor market is not yet picking up steam over here. So perhaps they will continue to paint a neutrality stance in the report itself. So that will be at 8 p.m. Singapore time. Then thereafter, we have the ECB monetary policy decision that will be at 9:15 p.m. So market is also expecting no change at 2.15%, and the depo rate will be at 2%. And most important will be the press conference to look out for the President Lagarde latest monetary policy guidance. So market participants is expecting no change in the tonality, more like taking things data by data basis, and perhaps they will start to remain on the whole for a much more longer period, given the fact that inflation rate in Eurozone is also not is rather not picking up steam as compared to the Bank of England in UK and versus Australia, where previously the RBA governor sounded pretty much hawkish due to upgraded inflation forecasts in Australia, but that was not being seen so far in the Eurozone. So they might be likely to maintain status quo. So that will be at 9:45 p.m. Singapore time over here. And to have a quick look on the situation over here on Friday. So we know that this coming Friday, we will have the non-farm payroll data initially, but due to the government shutdown, partial shutdown, I would say, the non-farm payroll data that was initially scheduled to release this Friday has been delayed to the 11th of February, which is not in, pardon me, sorry. So give me a minute. So 11th of February. So 11th of February will be on next Wednesday. Next Wednesday. So this Friday, just a heads up, there'll be no non-farm payroll data. But even though we know that non-farm payroll data is the key highlight on Friday, but on Friday we will still have this another tier 1 US data, which is the forward-looking Michigan Consumer Sentiment or University of Michigan Consumer Sentiment preliminary data for the month of February. So that will release on Friday at 11 p.m. So market participants is still looking for a lackluster number at 55, slightly below the previous December print of 56.4. So if it going to came in within such low lackluster number, that could allow the Fed to maintain its we call it a ongoing interest rate cut cycle, but the only thing is that the next cut or the fourth cut will still be priced in to be in the summer months of this year instead. All right, then also don't forget over the weekend we do have the Japanese snap election on Sunday. So on Sunday, the results will start to come in perhaps around Singapore time at around 7 p.m. and it will definitely have a great impact or significant impact on Monday early Asia session on the Nikkei 225 and as well as the dollar yen and the yen crosses. And back to the earnings, all right, so we know that earnings still ongoing in the US. So for today, after the close of the US session, we do have one mega cap technology stocks pertaining more on Amazon will release its Q4 earnings after the close of today's US session, which is right after 5 a.m. Singapore time on early Friday, 6th of February. All right, so that sum up today's daily dose of market insights. For heads up, tomorrow there'll be no daily dose as I'll be away, and do have a great weekend, and we shall speak again on next Monday on 9th of February. Thank you.